Let me tell you, I want an Apple headset, but not at $3,500. That's Apple's main problem after unveiling this product is it's a lot higher than anyone's expectations. And Apple stock was most certainly priced for perfection. At one point before this conference, Apple was up over 2%, expecting a whole hell of a lot better news. And specifically the pricing. Analysts were expecting this device to be priced around $3,000. It was instead priced at $3,500. So a lot of analysts are calling this a novelty toy. So really the price increase in Apple stock that you have seen from call it 170 to 185 was based on this VR headset being somewhat of a success in driving incremental revenue for the next couple of years. But it looks like now it's going to take a long time before unit sales are actually going to materialize in this new product. And this was the first major product that Apple has launched since 2014. And it's not going to be a huge hit, even though it looks badass. So we're going to talk about the implications of this Apple event on the broad markets. What's likely to come from here? Are stocks going to crash? Are stocks going to rip? Which ones will do well? Which ones will do bad? In my personal opinion. And we're going to go over AMC Stock, where the liquidity situation currently sits with this name. Ladies and gentlemen, let's get into all of this information. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. Now, what you've seen with Apple today, like I said, is the stock was up a lot before this event and sold off aggressively after this event. Now, we called this out. This was a classic buy the rumor, sell the news event. There was high expectations. This trade was easy. That's the bottom line. Trade was easy because of what happened with Apple stock recently. I mean, look at this on a 30-minute chart. You ramped up into this event. Disappointment, stocks falling. Now, it's amazing that the NASDAQ actually closed positive today. The NASDAQ closed up 0.07%. Now, Houston, we have a problem because the top 7 stocks, your big tech stocks, have been the ones to drive all of the gains in this market. All of them. Without your top 7 stocks, markets would be negative for 2023. And Apple is the largest of those names. Now, what kind of effect does this have on hedge funds' liquidity? I think that is a big question. Now, it depends on, where Apple stock does go from here. Obviously, if Apple stock recovers and takes off to the moon, well, it's not going to have that much of an impact. But if Apple stock does fall, as I expect it will continue to trend downwards towards that 175 level, seems pretty reasonable. Well, that's going to put a little bit more pressure on the hedge funds. Now, to what extent do other big tech names fall? I think that is going to be the biggest question. If they all take the lead from Apple and start to come down, then you're going to have a bigger problem for hedge funds. Unfortunately, I cannot forecast that with any degree of certainty or, the best I can do is assume. And assuming is not a strategy. So worst case scenario, this does nothing to squeeze shorts out of short positions. Best case scenario, this leads to big tech coming down. Now, if big tech does come down, it's very likely that you get a bid from your small and mid cap stocks. Some of those names can start to recover a bit. Or you just get big tech coming down and nobody else recovers. That's also possible because like Mike Wilson said, as we reported in the last video, your cyclical names, your retailers, your stocks that are really more so aligned with the real economy, right? In good years, they do well. In bad years, they do bad. Those stocks are already priced for a recession. So there's not a lot of liquidity there anyways. It's all in the big tech names. So we're going to have to see what happens and how this event does play out with Apple. But if you look at this chart, it's pretty easy to see, at least in the short term, you're probably going to have some pressure here. The stock has been doing nothing but going higher with basically no chill. Absolutely none. And the problem, the way that I see it with hedge funds, is Apple alone controls a lot of the collateral behind some of these AMC short positions. Apple stock being at 185 earlier in the day today makes the collateral position for AMC look a lot more attractive than it does now at 179. Well, if this does trend downwards into the mid to low 170s, well, they might have to pledge more collateral for their AMC short positions. And it's funny, right? It's almost comical that AMC was kind of flat today. It was up 0.5%, but it was in this range all day until what? Until the real sell-off started in Apple, the dramatic sell-off where you went from up 2.5% to down 1%. What actually happened is AMC stock started moving higher as Apple was dropping. And this is something that we see quite often, is AMC inversing stocks such as Apple. So it could help to fuel some support with Apple or with AMC. And that would not surprise me, as some shorts will have to pledge more stock for their short positions, or some shorts just outright will choose to cover on their short positions. Now, the live short interest of free float has obviously fallen a decent amount with AMC. A lot of the short interest currently is in the option activity, and that is what I like to call indiscriminate shorts. So when your stock, like in AMC, does go higher, market makers have to buy back stock. There's no real emotion to it. There's nothing else to it. That's just the simple fact. Kind of like a gamma squeeze. People go out and buy calls. Market makers, they go out and buy shares. People go out and buy puts. Market makers go out and short stock. Simple as that. Well, when it reverses, market makers get to buy back a lot of shares. So I think that's a big question of, does this potential drop or next leg down for big tech create an opportunity for AMC stock to rally? Well, I think yes. Just naturally, I think yes. But I think GME earnings are still going to be the biggest catalyst. They're still going to be the thing that kind of sends the stock much higher or much lower. And with this reaction you're seeing in Apple, which likely does carry into big tech to some degree, it's going to make GME earnings much more volatile and might make shorts cover on the short positions a little bit quicker. Now, a big problem that I see with Apple is you have seen a lot of price target increases heading into this event. Everyone was trying to look right because they expected Apple to rocket higher after this event. That did not happen. Just bottom line. Even 3 new price targets were placed on Apple today. From Evercore ISI, they increased their price target from 190 to 210. B of A Securities increased their price target from 176 to 190. And Wedbush increased their position to their price target to 205. And now it's not looking so likely. So we'll ultimately see what happens there. I think that does give you room for some downgrades to the price target as people realize this is unaffordable, completely unaffordable to be a mass market product. It's literally never going to happen. Not at this price point. It'll be years likely before the price point is to a respectable level for the average citizen. Now, if we take a look at AMC and the overall data here, short score of 92, short interest dollar amount currently sold short of $507.64 million. Estimated short interest of free float, 21.61%. Free float out on loan, 35.4%. Shares out on loan, 182.8 million. Days to cover, 7.47. Cost to borrow, 59%. And 100% share utilization. Cost to borrow fees did ramp up a little bit today. Cost to borrow average at about 70%. Cost to borrow max at 126.36%. And cost to borrow minimum 4.32%. The last real number we got was 50%. Closer to in line, really right in between the cost to borrow average and cost to borrow minimum. You're seeing the interactive broker's cost to borrow fee of 65%. You do have 150,000 shares that are available to be lent out. But again, like we said in the last video, there was more option activity that was negative on the stock that did help to fuel some, containment on AMC. And I think that's ultimately what they're trying to do, is contain the stock and at the same time not let you in on the real short interest. The real short interest is around 35% with AMC. They don't want you to know that, because that represents a big problem for them. If AMC does start to rally, it rallies the troops. It's like winning a battle on the battlefield when you have a bigger battle to come. I mean, there's a lot of momentum there, right? So, GME earnings. We've talked about this before. And today is only Monday. Tomorrow's going to be Tuesday. GME reports earnings on Wednesday. But I do want to give you guys a run through quickly of the GME data as well. The short score is 88. $1.21 billion currently is held in short positions on GME. Estimated short interest of free float is at 18.34%. Free float out on loan at 25.84%. Shares out on loan 69.01 million. Days to cover 15.46. Cost to borrow 9.97% on a trailing 3-month average, and 100% share utilization. If we take a look at the live cost to borrow fees, about 12% for the cost to borrow max. Interactive Brokers has about 1 million shares that are currently available to be lent out, with a cost to borrow fee of 7.68%. So some good, some bad, pretty similar to the data that you see currently on AMC Stock. And again, due to some of this liquidity coming out of Apple today, which could come out of more big tech stocks to come, it could make a move higher bigger for stocks like AMC and GME when they ultimately do report on earnings. Now, something else that I do like to point out for us is just overall you're due for the markets to come down. So I think this is almost all but a guarantee at this point. If you look at the NASDAQ on a weekly RSI chart, every time it gets overbought, you eventually come down. Sometimes bigger than others, sometimes smaller than others, but it always happens. Last time you were overbought on the weekly RSI was back here in November of 2021. You haven't even been close since, and now you are overbought on the RSI. And you're kind of, sitting at 3 weeks now overbought. So it looks like you should see a down week here shortly. If we take a look at what's happened recently with the NASDAQ, you have seen 1, 2, 3, 4, 5, 6, 7 weeks so far in a row that have been green. This is what is fueling this RSI to be overbought. So we'll see exactly how this does play out. The lower big tech goes, the better for AMC stock. Now, current probabilities for a Fed rate hike sit at 24.1%. 76% chance of a pause. So you're probably going to get a pause in June. Markets are assigning a 52.4% chance of a rate hike in July and 34.5% chance for a pause in July. Now, today's data that we got, like I went over in one of the last videos, the ISM Services PMI came in at 50.3. Consensus was 52.2. So if you cut out all the noise from everything else, from Apple, from all the other news that we got today, this was a positive development in terms of service inflation, which has been the sticky part of inflation. But another big thing that affected the markets before this Apple conference was a comment from Moody's. And I put this in the trading group if you guys want access to that, link down below in the description of this video. Moody's says, quote, "The impact of latest debt limit law on U.S. profile is low." Now, how the markets took that was just because we got a debt ceiling deal done didn't really change the credit outlook to the US, which is not really what people wanted to hear from Moody's when you're still faced with a possible downgrade. So that did have an effect on the markets as well. Apple is actually climbing here in after hours, which is quite surprising, up 0.12%. Again, we'll see once we actually do start trading. And Meta is actually coming down a little bit here in after hours, guys. So let's take a look at some of the technicals on AMC. Go ahead and wrap up this video. Let you guys enjoy the rest of your days. If we take a look at the MACD, that's very bearish. Take a look at the RSI, that is very bearish. Take a look at the price action of AMC, that is very bearish. You're pricing in a lot of bad news, and I think the bad news is really not justified here. You just even seen for the month of May, the best food and beverage sales per person that you have seen in the history of AMC's business. I think if you mix that with the popcorn business that is doing very well, presumably from what we can see, a lot of places are sold out of the popcorn, or variable pricing on movie theater seats, or the Spider-Man movie that just came out, that is the second biggest opening movie of 2023. Lots of signs point to the business fundamentally improving, but what? Wall Street doesn't want to acknowledge that. They don't want to let AMC stock go higher for whatever reason. Wink, wink. So that is it for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.